Thanks for joining us today. My name is Mitchell Hora. This is a TopSoil webinar where we're going to really dig into a lot of details here about tax credits, about 45Z, about carbon intensity. You can see all these webinars that we do at the Continuum Ag YouTube page, and you can listen to the audio on the TopSoil podcast. I'm excited for our guest here today that we have had some conversations here over the last, I don't know, Dan, it's probably been a little over a year that I first met you. I've had a lot of good
hmm
conversations and it's been great to build out a relationship here and figure out how do we help farmers on this? How do we help ethanol plants on this, biofuel producers that there's a lot of opportunity ahead and hopefully it works out the way that we want it to. But if anybody's going to get it figured out, it's going to be you and it's going to be me. I think we're best positioned to get it done, right? But Dana was a guest at our TopSoil Summit here this year, helping to talk about, how tax credits are formed and the whole process of 45Z. So today we're going to carry on that conversation. If you want to see the recordings from the TopSoil Summit, you can find those on our YouTube or on our website as well. But without further ado, let's get digging in. So the quick intro on Continuum Ag for anyone that's new. We're a software company based down in Washington, Iowa, really for farmers, by farmers. I'm a seventh generation farmer myself. We help farmers build soil health and quantify soil health, especially in regards to putting a carbon intensity score on it. And really all this stuff boils down to managing data and being ready for these emerging opportunities. And the biggest emerging opportunity I think that is at the forefront is the potential around 45Z or around carbon intensity at large, the whole category of helping companies reduce their scope 3 carbon footprint starting on the farm. And I think that carbon intensity scoring is going to set a real precedent that can be utilized in all kinds of different industries, not just biofuel, even though that's what we're going to talk about here today. But I'm just very bullish on the entire category, the entire concept here. Uh, but 45Z is a tax credit. It's a tax credit for biofuel producers. And in order to create tax credits, it takes tax professionals and CPA firms. And that's why I'm so excited to have Dana Jackson joining me today. She's with RSM. I'll let her introduce herself. But RSM is one of the leading CPA firms in this space. We'll kind of explain where we can work in connecting, this data from the farm, and ultimately it flows through CPA firms, and they've got to create the tax credits. And we don't know all the rules yet to jump to conclusions. We don't know all the rules, but I think in general, Dan, obviously you've been developing tax credits for a long time. You've got a good idea as to how tax credits work in general, how this data is going to work in general, and then we'll see what happens with going from there with 45Z. But without further ado, Dana, I'll loop it over to you. We've got a couple different slides and stuff about RSM and about what you're doing, but we can kind of toggle back and forth through them or pop stuff up as
Sure.
we need. But we go from there. But Dana, really appreciate you taking the time and hanging out. We got a lot that we can discuss. It's probably 4 hours worth of stuff that is what it would really take. But we'll hit on the highlights here and go from there. But why don't you let me stop yapping and introduce yourself and introduce RSM.
All right. Thanks, Mitchell. Yeah, thanks for having me today. The first couple of slides we'll go through pretty quickly, just to give you an overview of my role at RSM and the firm in general. So, as Mitchell said, I'm Dana Jackson. I'm a tax partner at RSM. I've been with RSM a little over, well, almost 20 years now, I guess. And I serve clients all over the country, but I live in Sioux Falls, South Dakota, but I am from Iowa, and I did attend the University of Iowa. So hopefully there's a few Hawkeye fans on the call. But
We try to keep it to a limit. If
yeah,
when
and
limits and stuff in these. Like
I
usually
figure
they
I was
cap
like,
out, based on number of attendees. No, ours it caps out at Hawkeye fans, and we already have Dana on here, and we have Microwave U. That's three. That's the max. That's the
yeah, I mean, when I hesitate saying that with this crowd because I might lose credibility if there's a bunch of cyclones on here. But anyway, so yeah, I live in South Dakota, so I've worked in the biofuel ag space basically from the start of my career. So I'm very passionate about the industry. A little bit about RSM. You can see on the slide if you're looking at the slides. We're the fifth largest firm in the nation. We are a global firm, but here in the U.S., we have over 16,000 professionals, and we're in almost every state. I think if you go to the next slide, that's more of our maybe global.
yeah.
Oh, this is just describing our services. So we have consulting, assurance, and tax, and won't dive too deep into consulting and assurance today, but we'll really focus on the tax practice and what we do in the tax practice. So really, in my area, I co-lead the clean energy practice at RSM. We're very focused on tax credits and incentives that are available for investment in clean energy projects, and like for example in the production of clean fuels. And so we really advise clients in all areas of that space.
I like it.
I think moving, yeah, and this is just a little more about our services, and how we could help advise in the clean energy space. So we would, you know, get together with our client, can do a high level assessment, feasibility analysis of what credits and incentives you might be that might be eligible for, and provide high level estimates for you, and then really dig in and advise throughout the entire process of generating those tax credits. And you'll see we listed some specific things here that like eligibility requirements for the credit, the prevailing wage and apprenticeship, domestic content, energy communities, and the pre-filing registration. And we can talk more about those in detail, Mitch, if you want,
Yeah.
but just kind of showcasing all the nuances that we deal with when advising our clients on their eligibility for the tax credits.
And we're going to talk about 45Z, of course, but there's all kinds of different credits that are out there, right? About research and development tax credits or renewable energy and stuff like that. Like, are there a couple of them that you've primarily been working on over the last multiple years that have been the main thing? Obviously,
Yeah,
45Z hasn't even started yet, right? So, are there a couple
right.
of them that are kind of some of the main stuff to highlight and to note for right now?
Yeah, so the research and development tax credit, that's really where I spent the majority of my career, was in that space,
Hmm.
and helping clients get an R&D tax credit for various activities, development of new products and process improvements in their processes, or developing, or excuse me, producing improved products. And we actually did a lot of work with R&D credits in the in the biofuel space. And then in the last couple of years, really been focused on a couple credits. One is the second generation biofuel producer credit. That credit is available for many of our biofuel producers who are producing corn kernel fiber ethanol, for
Mhm.
example. And then we got the Inflation Reduction Act. And so I think the IRA's birthday was August 12th.
Yeah,
The two
a week and a
year,
half ago.
yeah. So over the last 2 years, mainly focused on those credits. And as you mentioned, Mitchell, the 45Z credit doesn't start until 2025, but we've been advising clients getting ready for that credit. And there's been some new guidance actually, and some compliance requirements that have come up over
Yeah.
late spring and over the summer that we've been helping clients with. And then the other credit to mention would be the investment tax credit, and or otherwise referred to as the ITC. And we've been helping clients in that space, mainly in like the ethanol plant space. For example, if a client puts in a combined heat and power system, and we've also been working with a lot of RNG, or renewable natural gas, biogas developers who are developing anaerobic, putting in anaerobic digesters at either dairies or landfills to produce RNG.
Lots of different programs out there. And I think that's why this is so important too, and why the CPA firms are so important in all this. There's so many different programs. Obviously, a ethanol plant or a farmer, like we can't keep track of all these different things. That's why having the CPA firms handle a lot of the paperwork and handle the compliance and stuff is so important. Real quick little tidbit on a lot of those programs that are out there today. You're applying for federal tax credits. Are a lot of them like if you don't if you more than cover your tax liability, are some of them direct payment back, or are a lot of those being resold or brokered back out if excess credits are created?
Yeah, great question. So there is a direct payment option for many of the credits in the IRA, but it's limited to what we refer to as applicable entities.
Yeah.
And just high level, those would be your tax exempt entities. So when we're talking about our for profit businesses, then we would be looking at a transferability option or taking the credit as a tax credit, which would be non-refundable. So what I mean by that is you would generate the tax credit and you would have to have enough tax liability to be able to utilize the credit.
Yeah.
And if you're a flow through entity like an LLC, you would flow the credit through to your members and then they would take that credit on their individual returns. And again, would have to have enough tax liability to be able to use it. So many taxpayers have been very interested in the transferability option, and transferability is available for the 45Z tax
Yep.
credit. And in that case, you would generate the tax credit and then you would put that credit out on the market and look for a buyer, and you would sell that tax credit likely at a discount.
Yep.
And we're seeing right now anywhere between 82 to 94 cents on the dollar. And so you would be, the buyer, and it's a great deal for the buyer because the buyer's purchasing at a discount, but they're getting a dollar for dollar reduction off of their tax liability.
Yep.
And the person selling the tax credit or the company selling the tax credit is getting cash. So even though it's at a slight discount, I think it's more appealing to get the cash and not have to worry about passing that credit through to members and not know what happens to it at the individual level.
There's a lot of stuff there that I want to dig into, and this is really getting into the meat and potatoes, right, of what I wanted
Right.
to have our conversation about today. Also, for everybody, if you've got questions, we've got the expert here, so ask your questions, and we'll dig into those as much as we can. Put stuff in the chat or use the Q&A function. So, okay, a bunch of different stuff there. I've had a couple of the ethanol plants I've talked to talk about the pass through, and that would be in regards to if your ethanol plant is, they're not necessarily co-ops anymore, are they? But you think of it as a co-op or a farmer
A lot
owned
of them are LLCs,
LLC.
but their members may be farmers
Yeah.
that deliver corn, or they may not deliver corn. They just may be invested in the plant.
Yeah. So instead of being a privately held company like some of the big guys, a Poet, Valero, a lot of the ethanol plants are farmer owned or a lot of local investors and stuff, right? So it's my understanding that those folks today would be where what you were just talking about. They don't necessarily pay federal income tax. The tax liability is passed along on the K1s. Is that right?
Yep.
Right. So the members would get the pass through tax liability on the K1s. They would get paid some kind of a dividend or whatever, some kind of a payment. And that'd be utilized to help to cover some of that tax liability. I've heard a couple of plants saying, hey, maybe we could pass along the 45Z credit to their shareholders in that same way. But in my mind, a lot of these farmers probably aren't going to have enough tax liability to need to offset. So they'd probably be also looking to try to resell these credits or
Well,
not to really use them themselves.
yeah, so I think the decision is based on the amount of the credit.
Hmm.
And so if you have, let's say that for 45Z tax credit, once we get the guidance, which we don't have yet.
Yeah.
But once we get the guidance, we determine that a plant that is doing corn kernel fiber ethanol, for example, is going to be eligible for 45Z. That's only going to be a small percentage of their gallons that would be eligible. And so I'll just throw some numbers out here. Let's say they generated $2 million tax credit for 45Z. And at that level, at the $2 million level, you may not have as good of luck in the market selling that, honestly, because a lot of the transactions that we're seeing are, 10 million or more for transferability purposes. And also at that credit level, by the time you pass it through to all of your members, you're it might be in an amount by the time you spread it across all the members that is actually able to be utilized at the individual level, right? What I would say, I'll also add here that at the individual level, if they're not able to use it in that year because they don't have enough tax liability, they can carry it forward
Right.
for 20 plus years. So that's also a benefit. They don't just lose it, and
Correct.
it would carry forward.
You can
Now,
also amend your previous year tax return too, right?
and
Up
carry
to
it back. Correct.
to look
Yeah.
back or carry back up to 3 years.
Yeah. Yeah, and not people don't really. That's not well. 1 year for the general business credits carry
Okay.
back. People don't typically. I mean, you have to amend a return, and that's not always the most
Not as
desirable
straightforward. Yeah, it's going to
option,
cost
right?
money to do it.
But it's possible, yes. But contrast that with, let's say, a plant generates a $30 million credit. Well, now you're likely not going to want to flow that credit through to the individuals, because now you're
For sure.
talking much larger amount of credit going to each individual, a much larger tax liability that would be
Yeah.
necessary to utilize the credit.
Yeah.
And so in that case, it would be likely that the plant would want to take that credit out to market,
Yeah.
sell it, get the cash, and
Sell
then
it in
with that
bulk.
cash,
Right.
they
Sell it
could
in
either,
bulk to one
yeah,
buyer or one check coming in, then redistribute the cash.
right.
Yeah. And actually, Valerie had perfect timing on her question there. Is an ethanol facility, if they do go sell those $30 million of tax credits in our example, is that income taxable?
No, so
Yeah,
the
it's after
IRA,
taxes.
the IRA specifically in the statute, it discusses that with the transferability, that cash coming back in our example to the ethanol plant would be tax exempt.
Yeah.
And then the buyer, whoever's buying the tax credit, does not get a deduction for the purchase of that tax credit. So that's how that works.
Makes a lot of sense. What about if a company has $2 million for the credits or something small? What could the farmers or could some of the local people, could they buy the tax credits?
No, it has to be an unrelated third party that's
Oh,
purchasing the tax credit, and you're typically going to see um, C corporations that are purchasing these, and C corps that have significant tax liabilities.
sure.
So, insurance companies, banks.
Yeah, but what if you have, for example, like you got an ethanol plant in South Dakota that creates some of these tax credits, and you've got a business owner that farms and has other stuff in Iowa or in Indiana or in Illinois, something that doesn't, they're they're still a farmer, but they're not directly associated. Could they buy it, or is that
Um,
still too
they
close?
they 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 could, but here's the issue is that and this is getting into some some tax technical. I don't want to get in the weeds here because I don't want to bore everybody, but there we have in the tax code a section 469, and it's a passive activity limitations. And so what that means is that you are limited if you have a tax credit from a passive activity, so one in which you're not you're not active in, you are limited by the amount of credit because you have to have enough passive income to be able to utilize that credit.
Hmm.
So in your
Wow.
example that you just gave, and that's a very high level explanation, but in your example that that you just gave, I don't think that that would be, you know,
Is
something that
their
would,
income that in that case, a farmer or a large farmer that is paying substantial, taxes, their tax liability is all based on very active
correct,
working income.
correct.
So yeah, so they might not be
So
able to
that would
utilize
not
it.
be right. That would likely not be an appealing. um,
Is that just for this type of tax credit though? Or like is that
all.
all? That's all.
Yep, it's all.
Okay.
We
So what
were
about that?
hoping.
Just like in general, right? Like just for like a normal farmer, and just speaking abroad here, like as a farmer, or like for me paying taxes, like could I buy tax credits from somewhere else to offset my own tax liability? But it sounds like not necessarily when you're really actively, it's not passive income that I'm trying to offset.
Right.
Okay, interesting.
Yeah, that's why. And when you think about the effort of purchasing a tax credit, you have to find, you have to match up a buyer and seller. You're going to
Yeah,
have a contractual agreement that attorneys and brokers are going to have to write up. You're going to have indemnifications,
yeah,
and there's cost to that, right? And so
you got to
it's
scale.
right, and so you that's why we're seeing the credits purchased, I guess, in larger amounts, like
Yeah,
a $10 million credit, for example, versus like a $1 million credit,
yeah,
because the cost associated, the size of the credit doesn't really affect like the cost to do the transaction,
for
if
sure.
that makes sense. And
Could
so
you pool a couple of them together? Like if you've got, five different ethanol plants that all created these tax credits and each one has like $2 to $4 million worth of credits, could they all kind of join together and sell them to one common buyer who's buying from four or five different entities?
yeah, I mean, anyone could. I mean, you're not going to be able to, like, each taxpayer would have to sell theirs separately, because
Right.
but you could use that, I suppose, as a negotiation in the market, where you could go to market together, and if the same buyer might be looking for multiple, but or they could buy multiple credits to get to the size of credit that they want to purchase. But I mean, each taxpayer would have to go through the register. You have to register your credit with the Internal Revenue Service, get a ID number, essentially. And it really, you'd be talking about, in your example, four separate taxpayers, um, and you'd have to have a contract with each one. So I don't know how much cost savings you would have for the transaction. It would be more about maybe giving you more market appeal, if you will.
Yeah. It'd be there'd still be the cost, but it's in the negotiation on the buyer side to say, hey, we're gonna kind of spread across some of these legal fees, or we're all gonna use the same contract, right? We're all gonna use
Right,
the same contract, we're gonna go through the same thing, maybe more efficient on your side as a CPA, more efficient for the broker. But it sounds like it's just nuance at that point. It's not a huge selling point. It's just, all right, maybe there's gonna be a little bit of money saved. Or slightly better deal because of that.
right.
So what that really boils down to, everything you're talking now, what I'm thinking about is, holy smokes, like each ethanol plant, they really are going to have to figure out some volume if they're going to make a go at this.
Right.
A
I
volume
mean,
of credits, not you can't just dork around. And I think that's how I've thought about it from the beginning. Like if you're going to millions of dollars is it's millions of dollars, it's a lot of money, but by the time you figure out how the credit's really going to work and the rigmarole you got to go through and what the buyers are looking for, you probably got to be in that. It sounds like at least five, if not $10 million minimum to
right.
to make this work.
Agreed. Otherwise, you would flow it through to your members. And a lot of ethanol plants out there are have been through that process before with other credits. They may have taken an R&D tax credit in the past, or they're taking the second generation biofuel tax credit, and they had no choice but to take it as a non-refundable tax credit. We didn't have transferability as an option, and
Yeah.
these aren't refundable credits. So, and they would be, those credits would be closer to those, $2 to $5 million amounts.
Yeah.
So there's definitely ethanol plants out there that are familiar. I would say most of them are familiar with
These concepts
monetizing the
here.
credit
Yeah,
that way,
yeah,
where you're just going to flow it through to your members.
you bet. This has been good. Let's back up a little bit and talk about before we can broker out any tax credits and resell them, we got to create the tax credit first, right?
Right.
So talk about the process, right? You've done this a million times. Talk about, I think it's the opinion letter process is what I think I'm talking about, right? But
Right.
currently, I'm obviously not the expert. You are. Talk about what is going to be the process on your side to create a tax credit.
Okay. Great question. So, and regardless of whether you're selling the tax credit or you're, putting it on your tax return and flowing it through to your members, at these dollar levels, you definitely, well, there are certain requirements in order to, claim something on a tax return in terms of the substantiation level that you have, to get to put something on a return. But especially when you're going to sell the credit, the market is going to require that you have a tax opinion associated with that credit, like you just mentioned. And so that what that process looks like is, we would, and I'm speaking from, RSM's point of view, but I would assume it's a similar process with other accounting firms or even potentially a law firm. But we would go in and first determine the eligibility for the credit. And so, of course, we're going to take the Internal Revenue Code, the any guidance that we get, notices, regulations, things like that, that we have to use as the law, and go through, determine if you're eligible for the credit, and then actually calculate the credit amount, and then issue a tax opinion that is essentially saying, we RSM came in, we verified not only that you're eligible for the tax credit, but also the amount that you're eligible for. And, and you're basically alerting a potential buyer to, as a seller, you're saying, hey, I had this third party verify, substantiate the credit for me. This is legit. You're still going to have risk involved. So you're still going to likely have, indemnifications in that contract, in case for whatever reason that credit is determined to not be at that amount. And so that would all be worked out as part of the contract that you work out, that you have with the broker.
Yep.
and legal counsel. But the starting point is definitely a tax opinion, and that's what RSM would be providing.
Yeah. Okay, so all kinds of questions, of course. In that eligibility check, obviously, I know we don't have all the final rules yet, but is there anything that's blaring so far in the rules that we've gotten that you think that certain ethanol plants may not be eligible? Or do we think like pretty much everyone's should be fine and will be eligible?
Well, the eligibility for 45Z is dependent on your carbon intensity score.
Oh, I
That
see.
is,
Yeah.
yeah, that is supposed to be computed with the Argonne GREET model.
Yep.
The IRS is supposed to be releasing a table, and the statute gives them till the end of the calendar year, which is, not a lot of time when the credit starts 1/1 of 25. But this table is supposed to lay out the emissions factor that you use to calculate the 45Z credit.
Mhm.
And we don't know what this table will look like. We don't know how granular this table will be. We don't know what scoring, if you will, we're going to get on that table for various, what I would call feedstocks. So that's really what we're waiting on. I mean, if you talk to most plants without carbon capture and sequestration, they may not be eligible because you have to have a CI score 50 or below. Now, where some plants without carbon capture, some plants may be eligible if they have this corn kernel fiber ethanol, which I mentioned earlier. That's the second generation biofuel.
Mhm.
And the reason is because those gallons would likely be at a carbon intensity score that is below
Very low.
50.
Yep.
And so we're hoping that we would be able to carve those gallons out, and say, as a percentage of total gallons, whatever the number is, 4% of our gallons are at a CI score of 26 or whatever it might be. And you could potentially get 45Z credit for those gallons.
Sure.
There's also language in the statute, excuse me, that indicates that a taxpayer may be able to submit for a provisional score. So let's say the table comes out and it says, that corn-based ethanol is going to be at a 55.
Yep.
And so then it's like, well, shoot, we're not in the money. But maybe that plant has done things, like even without carbon capture, maybe they have put in a CHP system, maybe they don't dry their, distiller's grains. So, that's giving them a better score. They may be below 50, even without carbon capture. And so in that case, our hope would be that they could do a life cycle analysis and figure out what their specific score is and then be able to submit that and take the 45Z credit.
Yep. So yeah, again, lots and lots of stuff. But that table, right, was referred to in the law or whatever, I think is where it was referred to that the
Yep.
IRS is due to put is the IRS puts it out or the Department of Energy puts it out?
The IRS will put it out, but they
And they have
will
to update
likely,
it every year?
yep.
Okay,
But they're working. My understanding is that the IRS is working with other agencies,
for sure.
like the DOE,
Yeah.
to develop the table.
Yeah. And that table, it sounds like anyway that it's going to end up being here if you're using this feedstock, these are the emission factors for different components, right? Or obviously
Right.
you were saying we don't know what it's going to look like, but it sounds like it's probably, I think, right? I'm thinking out loud, but it'd be here's your emissions, here's your scope one emissions that are coming out of it. Here's what you can do if you were using different types of energy for
Yep.
your scope two emissions. And then hopefully, obviously from our side, right? Hopefully there's something along scope three and the where you're sourcing your corn from and your feedstock for your fuel, right? So
Right.
how are you sourcing that? And obviously we want them to say source your feedstock. Corn, as an example, has a CI score of 29.1, or you can use the GREET feedstock calculator at the farmer level, whatever, to recalculate your actual CI.
Right.
But yeah, until we know that table, that's why none of these companies know how to calculate their CI score today because we don't have the table. We don't know how creative they're going to let us be. But like what you're getting at in the statute is they have to get that out by the end of this year.
Right.
But it could
Yes.
be December
You're
31
correct.
and the tax credit's supposed to start on January 1st. But
Yeah. And we were hoping that we were going to see something in Q3,
yeah,
but that's looking less likely.
okay.
So I would bet that we'll see something in Q4. Hopefully, it is, prior to December 31st. My colleagues and I joke that, we better, you know, we better not make big plans over Christmas because the IRS likes to release,
Yeah,
guidance on a Friday before a holiday.
that's right.
Always, they do this often.
Yeah.
So, as soon as the guidance comes out, we're going to have to hit the ground running to, advise our clients. And I'm guessing it might be close to Christmas time.
Yeah. And I think
Hopefully I'm
that's
wrong.
awesome. What was it?
I said, hopefully I'm wrong. Hopefully we see it before then.
Hopefully Christmas comes early this year,
Right.
like
Right.
soon. But I think I'm with you. I'm not holding my breath, right? And I keep saying I don't think we're gonna have rules in this calendar year. I just don't have a lot of faith that it's going to get done. Now, at least it looks like there's some effort being made. There's some
Yes.
communication going on from the IRS. There was obviously a request for information from the USDA. Like it feels like they're trying to do their homework and they're trying to get this figured out, but like there's just a lot of moving parts here.
Right. So we got guidance at the end of May.
Yeah.
The IRS released a notice, and that notice detailed how a taxpayer would go through to get their excise tax registration to be registered as a clean fuel producer, which is required in order to take the income tax credit. It's a little bit confusing because you're dealing with two different areas within the IRS. But basically, the IRS is saying, hey, taxpayer, if you want this income tax credit, you first have to register with our excise tax group and tell us what you're doing, what's your activity, are you producing clean fuel? And that's the very first step that you have to go through in order to claim the income tax credit. So we got a notice that went through the process in order to get this excise tax registration number. And that notice had an appendix at the end that listed out all of the various feedstocks, because that's required to get that excise tax registration, is to let the IRS know what type of feedstocks that you're using to produce your fuel. And so that was actually, we were a bit surprised by the amount of detail, how many feedstocks were listed. So to your point, it does appear that they have been working on this, and they were maybe a little bit further along in May than we thought that they were.
Yeah.
That's why we were hopeful we were going to get something in Q3, more guidance in Q3, but obviously we haven't seen any yet.
Yeah. But to your point, at least they're trying to do some stuff. I hadn't heard any indication before that May 31st day or whatever day it was. I hadn't heard much of a murmur before that. I think I heard about like the day before, and that's it. Like there wasn't much notice, and they just threw that out there. And what that notice said is, if you want to be eligible for 45Z, you've got to register. They had until July 15 to do it. It was a 45-day window, at least for the early deadline or whatever, right? It wasn't a
Right.
deadline.
They said so. So the key is that in order to start taking 45Z, you have to have that approved excise tax registration in hand.
Yeah.
And the IRS said, if you want any hope of having it in hand by Jan 1 of 25, you need to get your registrations into us by July 15th.
Yeah.
So you could submit them after July 15th. It's just that the IRS was saying they weren't even guaranteeing the July 15th date and the Jan 1 date, but they were saying your best chances to get it by Jan 1, get it submitted by
best chance to be ready for Jan 1. We need 5.5 months or whatever.
Right.
So we need 6 months to do the paperwork.
And we have started, because of course we went through that process with all of our clean fuel producer clients. And we have started seeing, responses from the IRS come back asking some additional questions, wanting some additional information. I know they had one training back in June, I think, and I think they're having another training coming up here in a couple of weeks. So they're training their agents on the 45Z.
Teaching them this is corn, this is ethanol.
Right.
This is the GREET model. Yeah,
exactly.
So, but are some of those feedback from the IRS just kind of trickling out and kind of random, or is it like a lot of people are getting these?
I'm sorry. What was the question?
So you would just talk about, you submitted the applications for a lot of your customers, right? It sounded like that went pretty well, right? Did a lot of the ethanol companies get their
and
stuff
then and at this point the IRS is just in a review process, right?
Yeah.
So they're looking at the applications, and then we're just starting to hear back with additional questions. Some we haven't heard back on yet, but we expect to.
Yeah.
Soon. And
at least they're starting a dialogue, right? I mean, I read it as, hey, they're wanting some feedback and they're asking some questions, and it looks like they're asking pretty good questions.
Right.
Our
favorite question is, do you plan to take the 45Z credit? And if so, how do you plan to compute it? And we just laugh because we're waiting on them to tell us
I interpret that
how we need to compute it. So
I think it's basically them saying, we don't actually know how to compute this. So ethanol plants, can you tell us how you want to do it?
Maybe they're wanting us to tell them how we plan to compute it.
I think it's awesome. I think you and I just pencil out how we do it and we just tell them.
Yep. That's really good.
I'm just kidding. I do not need to do all that. But that does tie into Ruby's question here, though, that when we are going to be calculating the stuff, right? Once we have the table, once we have the rules, once you're helping to put together the opinion letter, what type of data are you going to be looking for? And what type of, she's asked about what type of third party validation is it going to have, if at all, or any thought process so far as to when the ethanol plant is presenting their data to you, or ethanol plant plus a consultant, right?
Yeah,
When they're presenting the data to you, what are you going to be looking for?
that's a great question. I, again, waiting on the guidance for the IRS to tell us what is required. But when you think about the experience that we have with other tax credits, really it's going to be documentation that the plant has available to, demonstrate their eligibility for the credit. And in this case, for 45Z, it's really going to be based on, that life cycle analysis or how you're computing the carbon intensity score of your fuel. It may also be testing documentation from a third party showing how many gallons you're producing that are from corn kernel fiber, for example. So it would be documentation related to the various feedstocks that you're using and how many gallons are produced from those feedstocks. So it's going to be really dependent on what the IRS comes out with for guidance, telling taxpayers, what they need to essentially
Yeah.
validate or substantiate that they are producing clean fuel from a tax. But then we have other aspects of this credit, right, that aren't necessarily based on the CI score, but are just requirements for the tax credit.
Yeah.
So one example is, you get increased credit amount if you meet the prevailing wage and apprenticeship requirements. And what that means is you have to be paying certain level of wages and have a certain amount of apprenticeship hours for the construction of a clean fuel facility. Now, that's only if your facility is placed in service 1 of 25 or after. If it's placed in service prior to that, which of course is most if we're talking ethanol plants, all of them were placed in service prior to that. Then they are kind of grandfathered in, or they don't have to meet those requirements for the construction of the facility. However, in the 45Z tax years, which are 25, 26, 27, if they have repairs or alterations, things like that to the facility, they are going to need to meet those requirements. So it's going to be kind of an annual look, if you will, at the eligibility for the tax credit for 45Z.
Makes a lot of sense. And to your point, I think it all boils down to the data that you have available. And that's where, obviously at Continuum, we're trying to help at least on the corn side of things. Because in my mind, like some of these things, like if you have carbon capture or if you don't, it's fairly like, here's your CI score if you do, here's what it is if you don't. Obviously, it's going to take a life cycle analysis and some real reports to back that up. But like once you do it, it's kind of like it's a one-time thing and it's fairly straightforward, at least in my mind anyway. Or like your energy that you're utilizing, like these things, yeah, it's going to take some work to run a report. But if if obviously we don't know the rules yet, but if the corn or the feedstock CI has to be factored in, that could be a big moving target. And obviously, that's why Continuum Ag is here to help the farmers to gather all this data. And we are putting it through a third party verification, utilizing eco engineers as our primary partner to make sure that that component does have some data to back it up. That's not just between Continuum and the farmer, but it has gone through a third party audit. And obviously, yeah, we don't know the details yet, but hopefully that is going to help with the opinion process.
Right. And some credits have required, so I'll give an example. So 45Q, the carbon um, capture and sequestration utilization credit. So
Yeah.
For utilization, if you're taking a 45Q credit for the utilization of CO2, you actually have to submit your LCA in advance of taking the tax credit and have it approved. The IRS and the DOE approve that jointly, and then you get to take the tax credit.
Yeah.
There's a lot of other credits out there, like the R&D credit, for example, or the second generation biofuel tax credit, where you put the credit on your return and you're not submitting anything with your tax return ahead of or submitting anything to the IRS ahead of time for the income tax eligibility. It would just be if you were audited, then you
Then
would
you'd
have
have
to
to show the
produce
report
that.
and
Right.
document.
Then you'd have to produce that documentation.
Got it.
And even with those credits, the IRS doesn't really call out anything specifically that you need.
Mhm.
So they don't list out like, this is exactly the type of documentation we want to see. So we don't know yet with 45Z how this is going to work. I mean, we know you have to get your excise tax registration approved first. We do know that. But when it comes to documenting the income tax credit, the actual 45Z credit, um, we're not sure if the IRS is going to call out specific
Yeah.
types of third party verifications, if they will, if you're getting your own score, like your provisional score, are you going to have to get pre approval for that? I believe that is the case. So that again, those are all the fine details
Yeah.
that we're
Yeah.
waiting on.
Now, a lot to still be uncovered there, and how we've approached it, right? We're in the same boat. We don't know what type of farmer data we're going to need or what type of documentation, what type of verification, but we still are moving forward and proactively doing it, utilizing some of the rules that came out of the 40B guidance, like utilizing the ISO 14065 standard for the verification or the audit protocol. So
Right.
we're trying to like set things up like that, knowing that it may or may not be what is ultimately needed, but we're just trying to be proactive to get all that done. So I think in Ruby's question too, she's asking, would you guys provide third party verification? It sounds like not necessarily, but you write a level of opinion. Can you maybe
Right.
explain that? You were telling me about it the other day, and it was a new concept to me that you can write an opinion letter, but you put a different level of, it wasn't a different level
Authority.
of authority. There we
Yeah.
go.
Yeah, and that's again, we're getting into some tax technical
Yeah.
discussion here, but just keeping it very high level. You can have different levels of authority that you're at for a position that you take on your tax return. So if you're at what we call, and when I mean level of authority, what that means is it's whatever you are determining that would be your success rate upon audit. So reasonable basis means if you are at a reasonable basis level of authority, you're going to have to put a disclosure in your tax return and saying like, hey, IRS, I'm taking this tax position, but I don't feel fully confident in it. The next level is substantial authority. And that means that at least 40% of the time you feel like you would succeed upon audit. And you don't need any disclosures with that. One level up from that is more likely than not, and that's basically, we're saying that we are, you know we feel very confident that this is the correct position. And there's a level even higher than that, which is like a should level of opinion. So you'll see, in order to what we're seeing, I should say, that in order to sell a tax credit out on the market, the buyer is going to require at a minimum a more likely than not level of opinion. And that would be given by a CPA firm or a law firm. So they want to see a CPA firm or a law firm saying, I verified that this taxpayer is eligible for this credit. Here's how I did it. So in
Yeah.
the opinion, you describe what your methodology was to verify the eligibility, how you got to the credit amount, and you go through all of that law and analysis and methodology. And then you're essentially opining, the CPA firm or the law firm is opining on their eligibility to take that tax credit.
Yeah. Yeah.
And
And is there rigor about how you set your level of authority on that? Is that basically like
Yep.
RSM kind of has their system and others kind of have their own, or is there
Yeah.
like,
It's really based on I mean, each firm, each accounting firm and law firm is going to have their own way of determining how
yeah,
they got to
okay,
their level of authority, but
okay,
it really will be based on the tax position, how black and white it is, how what are the gray areas.
yeah,
Sometimes if we have case law, for example, if there's guidance out there that we can easily point to, that gives us more confidence. But with these being new credits, it's a little more difficult because we don't have any case law yet. We really just have, guidance that the IRS will put out. And then we'd also look, of course, to the documentation that our client is able to provide us.
yeah, yeah,
And that is going to be like the things we just discussed, a life cycle analysis, testing results and reports from third parties, things like that.
yeah.
So,
It's gonna be a lot of work. Gonna be a
yeah.
lot of work. I think you're gonna have, if this comes through, you're gonna maintain your job security even more, and you're probably gonna need to hire some more people.
Well, we would look to, we might not look to every like detailed, like some documentation. You and I've had this conversation, Mitch.
Yeah,
Documentation is going to feed into the next, type of documentation. So
yeah,
what I mean by that is RSM would likely rely on a life cycle analysis. That's where we would start.
yeah,
Now the um, the consultant performing the LCA, they're obviously going to have to rely on
the data that they get. Yeah,
documentation.
that's
They're
right.
going to be drilling down into the details to get
Yeah.
to their
Yeah. And
to
I can
get to
talk
their
about the details of how we're approaching, right? So Continuum is helping the farmer to gather the farmer level data. Then we get our stuff audited by eco engineers who does the audits. Then that data goes to the ethanol plant and whatever software they are using, who's collecting the farmer data, plus potentially collecting some of the other agronomic, the other data as well. Then that goes through a life cycle analysis with whoever is consulting at the ethanol plant. They
right.
run a life cycle analysis utilizing our data and other data going into it. And then that life cycle analysis gets passed along to you guys. You're just going to look at that life cycle analysis data, not necessarily the continuum ag stuff in the farmer level info. You don't need to go that deep into it. Maybe you spot check or something like that, or look at the methodology or get some examples. But that's kind of what you're sounds like you're getting.
Right. That's right. That's what I'm getting at, because we're the CPA firm, we're the tax, we're not necessarily the life cycle analysis experts. So those on the their work product, if you will.
Sorry, my audio is being weird here. Can you hear me now, Dana?
Yeah, I got a low bandwidth like alert that popped up too on here, so
I think
maybe
I'm getting one as well.
okay.
Well, we'll power through here
We're
to the.
breaking the internet,
We
Mitch, with
are,
this.
gosh darn, all this detailed stuff.
Everyone wants to talk tax code. It's
It's
everyone's favorite subject.
That's right. Yeah, yeah. But it's really important. That's why I was so excited to have you on too, because this is super complicated. It's not straightforward, let alone that we don't even have the rules to know how to start interpreting them, to start figuring this stuff out. Like there's a lot of details here. And maybe that leads into Valerie's other question here in the chat about who's going to own that feedstock CI score, the ethanol plant or the individual grower. And I mean, ultimately, my interpretation of it would be that individual feedstock CI, it's tied to the feedstock at the beginning, but then that feedstock is going to need its CI score that ultimately the ethanol plant's going to need to own that and going to need that data to be able to pass it along and potentially take a claim on it if the guidance
Right.
allows for that, which I sure hope it does, or else I'm gonna be making some hard pivots over here at Continuum Ag. But I think it's all about the legitimacy of the data in my mind. I think that's what all this
Right.
stuff boils back to. Like if you want to be able to sell these credits for not 82 cents on the dollar, but closer to 94 cents on the dollar, it's going to depend on the legitimacy of the tax credit that you're bringing to the table and the amount of data behind it. If you want a higher level of authority on your opinion letter, it's going to take a optimal amount of data behind it. If you want to be more bankable and if you want to really capitalize on these credits and if you want to really get enough credit to make it worth it, which $5-10 million at least, it's going to take some real work and some real collaboration to get that done, especially without hardly any companies having carbon capture as an easy solution.
Right.
It's going to take a lot of work to get all that pulled together. Any final kind of thoughts and stuff on your side or something that we completely missed? I mean, obviously I could keep digging into the weeds on this with you for hours, but
Yeah. I mean,
any
I think we covered. I think we covered most everything. Again, we're gonna want to do another one of these when we get the guidance,
100%. That's a great
right?
idea.
And so it's always a little bit difficult to talk about the 45Z credit without the guidance.
We
So
don't have all the details.
someday we're gonna be able to have this conversation,
We're gonna know we need this and this and this, and here's how it's gonna work, and here's what we're doing. Yeah, no,
right?
I hope that day comes sooner rather than later. Again, I'm not holding my breath on it. Hopefully in my next webinar here with my local Congresswoman, Marinette Miller Meeks, maybe we'll keep lighting the fire under her and she keep chewing butt in DC and make them get their crap together. Our upcoming webinar, September 4th at 8 a.m. Diana, thanks. Just put the registration in the chat. We have Congresswoman Marinette Miller Meeks going to join us for a full hour. Like, incredible honor. Like, Dana, you're awesome. But like, we got the Congresswoman coming on here who
Well,
is gonna fill us in on her perspective.
that'll be great. I'm registering for that right now as
Yeah,
we
I
speak.
definitely want to get registered for it. The first I've spoke at 43 conferences so far this year, and the question almost every single time, the first question is, what happens based on the election this fall?
Yeah.
And I continue to iterate. This has great bipartisan support and yada yada. Well, we'll have Congresswoman Marinette Miller Meeks, who is very deep into this and is a Republican. She'll speak to the bipartisan support that this does have, and we'll dig into it with her. It's gonna be amazing.
Great.
Gonna be amazing. So, but anyway, Dana, really appreciate you hopping on. Again, we'll definitely have to have you back on when we get some more guidance. Appreciate everything that you've been able to teach me and just are being able to hang out and hopefully this all works. Hopefully
Thanks for
this
having
works out the
me.
way that we want it to.
Yeah. Nope. Thanks for having me.
No, it's been awesome. Sweet. Well, thanks, Dana. Thanks everyone for joining us today, and we will see you next time.